today. Welcome to both of you. Wilf, I guess Jefferies was a warning after all. It's just been bad news after batter.
Yeah, well, Jefferies missed on fixed income trading. I think the interesting thing for Bank of America tomorrow is whether they can do well on the two key issues that brought JP Morgan's stock down on Friday. And that was JP's guidance on both net interest income and on costs. On the cost front, we know costs always key for Bank of America. They've been bad during the pandemic. The last 2 quarters showed signs of improvement, and nothing over the last month or 6 weeks from Brian Moynihan and Bank of America have suggested they're going to guide for bigger costs in the year ahead. Maybe they will all of a sudden, but that's not currently expected. And on net interest income, they are the most interest rate sensitive. Maybe they won't overwhelm on that guidance, but again, I think it would be a surprise if they underwhelm. So there's a reasonable chance that Bank of America will come out in the Wells Fargo camp of this quarter's earnings, i.e. positive, rather than the JP Morgan side, negative.
Wilf, before I ask Todd about B of A specifically, any other thoughts on Goldman and JPM? I mean, these are really bad stock results. Yes, they've had a big run up, but why were analysts and investors caught so flat-footed here?
Yeah, I mean, Goldman sums it up. Really bad stock performance after a record performance for revenues and earnings and returns over the full year. So there's one aspect to which they've run up too much in the short term, particularly at the start of this year, coming into earnings as the stock market has rotated. The key thing that they both share, slightly disappointing on trading and disappointing on guidance for costs. And we'll see if Morgan Stanley and Bank of America have that disappointment in terms of guidance for costs when they both report tomorrow.
Yeah, Goldman shares are now up only 16% over the past year, over the past 52 weeks. Interesting. All right, Todd, let's do Bank of America. What would you do with the stock?
I don't own it, Kelly, and I think if we could take a step back real quick on the financials, you got to keep in mind this is one of the strongest sectors right now leading the market, along with energy, and any weakness that we're seeing in the financials is, I think, more macro related and obviously interest rate related. The 10-year pushing up through 1.8% as resistance. It's broken. It's a problem, but guys, we still have a steep yield curve. We've seen sort of a flattening in the middle part of the curve. Even if we get 4 Fed rate hikes, we're a long ways away from a flat or an inverted yield curve. So, as I said, banks are strong, and specifically bank industry within the XLF are doing well, even in front of insurance and securities and asset managers and specialty finance. So, as I said, I don't hold Bank of America. I'm holding more regional banks like Fifth Third, Key, and so on. It's Bank of America is trading 14.7 times forward earnings. I got a current PE of 14 compared to the PE of the XLF, which is like 9.5, so it's expensive.
Yeah.
It only yields 1.75%. It's well below the peers. I'd like to see them increase their dividend here a little bit. Just quickly on the consumer business, they're showing really good increase in customer deposits. Checking account values are up, but their loan growth is lagging, down about 12% year over year. So with inflation raging, Bank of America is going to have to kick up those yields they pay on checking accounts. That's going to hurt their margins. I'm not overly constructive.
Shepard Smith here. Thanks for watching CNBC on YouTube.